Hello everyone. In today's video, we're going to be talking about a specific valuation model that someone brought up in my new school community called the Blue and Orange Valuation Method. It's used by an insurance company called Markel, and we're going to talk about that today to value a stock Progressive, which just happens to be in my Roth IRA coffee can portfolio. So we're going to look at that stock today and try to see if we can come up with an estimated fair value using this very interesting valuation model. So what is Progressive stock worth, and should you be buying it in your own portfolio? In this video, we're going to talk about it.
This video is for educational purposes only. It should not be considered investment, legal, or tax advice. It is not an offer to buy or sell any security. Past performance does not indicate future results. Investing is risky.
First of all, I wanted to announce that I'm starting a free investing community. I'll put a link in the description below if you want to join. It's completely free. And so I thought this community would give us a chance to interact a little bit more, for me to kind of see common questions, probably start getting most of my video content questions from the school community. There are different levels. So for example, I've put on here my financial freedom course. And so at level 1, so right off the bat, as soon as you join the program or the platform, whatever, you'll have access to module 1, which is called the Wealth Triangle. It's kind of an intro to the course. And then also module 2, which is, I think, the most important part of the entire course, and that is the wealth mindset. So be able to take both of those right off the bat. Once you reach level 2, all you need to do that is just have simply 5 likes. So post a few comments, a few people like it, and you'll get access to module 3. So it says I need 12 points to level up so I could get access to module number 4. Ideally, this cultivates kind of an atmosphere of participation, of being willing to jump in and help others out, of posting interesting content that you find, and just generally doing what communities are about, which is sharing interesting stock ideas, fund ideas, ETF ideas, articles that you read. Over time, I hope this will become a very valuable resource for you, and also, quite frankly, me. Like, I had never heard of this blue and orange valuation model, and so I've already gotten value out of the community, and it's not even been active for like 4 days. This is the comment that I got that kind of kicked me off on this interest. It's from Michael Hemat. He posted in the stock ETF fund ideas. Anyone familiar with Markel's orange and blue method for valuation of its own stock? From the letter to shareholders, I arrived at a roughly 40% discount to fair value. Seems like a huge opportunity that isn't getting any attention. So this is actually for Markel stock, I believe, is what he is referencing in his valuation calculation, which I'll let you check out his calculation on School directly. But this is the stock that he's referencing. This is Markel Group. It has been called the baby Berkshire by a lot of people. But you can see that over a long period of time, it's been an exceptionally strong performer in the insurance business. And their CEO, Thomas Gaynor, is a very good investor. And this is the section where he talks about the orange and blue method. So he says, first of all, there is an orange component to the value of your company. And so the orange value is when you add up all the investments and cash on our balance sheet and subtract the debt we owe. We then divide that by the number of shares outstanding to calculate the net investment per share number. And then next, he talks about the blue component of the value. So the blue value, they add up all the non-investment operating income, non-underwriting insurance operations, and Markel Ventures businesses. We subtract out our interest expense and taxes to get a sum of the net income produced by our operations. We then normalize some of those components using 3-year averages or other overrides, and then we assign a conservative and consistent multiple to that total, then divide that by the number of shares, and that is the overall blue component. And then to find the total value of the company, the total intrinsic value, they add the two together. They say that they've done this internally, and that what they found is that it tracks their share price quite closely. Now, they use this as whenever the intrinsic value is meaningfully higher than their share price, they'll buy back shares, and when it's meaningfully below the price, maybe they'll issue equity or do something else rather than buy back shares. So it's kind of a capital allocation method. But to test this method out, I thought it would be interesting to value another insurance company. And so I chose Progressive, ticker symbol PGR. I actually own this in my Roth IRA coffee can portfolio, which I've never talked about before. I actually talked about it for the very first time over on I have another school community called the Coffee Can Investors Club community. In that community, I talk about my coffee can portfolio, I talk about my Roth IRA. So this is my cost basis. I actually bought this at right under $100 per share. It's like 99 and a fraction or whatever. So it's up quite a bit since then, and it's just an absolutely brilliant company. And so I thought maybe I would value this company to see if it's gotten too frothy or not. So to start with, we're going to go over to quickfs.net. So what we're looking for here is three things. We're looking for cash and equivalents. They show as of June 2024 is only about 90 grand, so not much. Securities and investments, this is the big one. They show about $72.3 billion. And then debt. So they've got long-term debt, currently $6.8 billion. So if we come over here to calculate the orange value of Progressive, we'll take all those numbers we just said, securities and investments. We're going to subtract debt, and we're going to add back cash, which gives us a orange value of $65.5 billion. Divide that by the number of shares, it gets us $112 per share. So that is Progressive's kind of investment portfolio value. So that's where we get to the blue value. So here what I've done is go over to my other favorite data website, which is Portfolio 123. And I put in a few different metrics. A couple of these I actually built custom. These were already pre-built for me. So we're looking at free cash flow over the last 12 months. That's the metric that I use instead of calculating their operating income and all that. I just use free cash flow. It's kind of a proxy. And I also used the 5-year average free cash flow. Merkel says on their letter they use 3 years. I am kind of partial to 5. But then anyways, I also, to figure out the multiple that we want to assign to these, I made two custom formulas. One, market cap divided by the 12-month free cash flow, so basically that here. And then also market cap divided by the 5-year average free cash flow, which is here. So if we look at these charts here, you can see the free cash flow over the last 12 months is about $13 billion. If we take a 5-year average free cash flow, the number is looking at basically from here to here. So the average of these values is going to be right here, which is currently 7.5 billion. So we're going to need those two numbers. And then to calculate the multiple, the reasonable multiple, I took the low. So the low here is about 6.3 times free cash flow. And at the high, it was about 13.3 times. And then in the middle, we've got about 10 times free cash flow. So I decided to make three different scenarios. One would be kind of a bearish scenario, one a super bullish scenario, and one kind of a midpoint scenario. I did the same thing on the 5-year cash flow multiple. So I got market cap divided by 5-year average free cash flow. At the high, we've got about 18 times, so 17.8. And then at the low end, we've got over here about 9.3 times. So I put that over here on the spreadsheet. This example here that we're starting off with is the low estimate. So this is kind of what I would consider to be a more bearish estimate of fair value. I did two separate blue values. One I just did using the trailing 12 months free cash flow and then the trailing 12 months multiple. So using 13.122 billion multiplied by the lowest multiple that's traded at in the last decade, which is 6.3, I come up with a blue value of 82.669 billion. Divide that by the number of shares outstanding, and the blue value per share is 141. So if we add 112 plus 141, we get an estimated fair value of $253 per share. Right now, the market price is $235, so this was suggested as slightly undervalued. If we look at the blue value according to the 5-year average, we get a little bit of a different story. So we got $7.4 billion average free cash flow. So we're going to multiply that by the lowest market value to 5-year free cash flow number, which was 9.3. That's going to get us 68.9 billion. divide that by the number of shares outstanding, gets us $117. Add 117 plus 112 over here, we get 229, which would suggest the stock is a little bit overvalued. However, we need to keep in mind that those were both using the low-end multiples. So what would happen if we looked at more of the midpoint multiples? Well, that's what I did in this example. We have the exact same orange value of $112 a share, but now we're going to be looking at the blue values being quite a bit bigger because we're using, instead of a 6.3, which was the low multiple, we're going to be using a 10 multiple for the trailing 12 months cash flow. If we do all the same math, we get a blue value of $224 per share. So add the blue value and the orange value, and we get a total value per share of $335. On the right, using the 5-year average free cash flow multiplied by the midpoint multiple of 13.5, then we get a book value or blue value of $170, which means the total value of Progressive would be $282. And then I also did the exact same thing using the higher end multiple, 13.6 for the trailing 12 and 17.8 for the trailing 5-year average. If we do that, then we get a blue value per share of $304 and $225, which means a total company value of $416 or $336 if you prefer to use the 5-year numbers. So if we put all of this together on one sheet, I always like to get multiple angles, bullish, bearish scenarios, just to kind of create a range of possible fair values. We showed that the price right now of Progressive at $236 is a little bit higher than the lowest valuation estimate that we got using the orange and blue valuation of $229. So it may be that Progressive is either about fairly valued or slightly overvalued at the current prices. However, using the other valuation metrics that we used, just taking the simple median of all 6 of these gets us a median fair value of $308 and a high value of $416. If Progressive all of a sudden traded tomorrow for $416 a share, I think it would be an excellent time for me to take profits in my Roth IRA. However, based on the current distribution of my fair value estimates, I would think that there's more upside potential in line for Progressive. If you just take the midpoint divided by price minus 1, that would suggest that it's about 30% undervalued, which is interesting because his estimate on Markel's stock was 40% undervalued. So thanks for watching, and I will see you in the next video.